have with us Anmol Singh Jaggi MD of Gensol Engineering joining in. Anmol, good morning. Thank you very much, Mr. Jaggi, for joining us. Firstly, congratulations on securing a 1,061 crore solar PV project and the 897 odd crore NTPC renewable project. Firstly, can we start with you providing us timelines for the execution of these contracts?
Yeah, good morning and thanks for having us. The two projects that we have won are basically projects which are going to get delivered in about 18 months timeline. Solar projects of about 1,000 crore plus in that range are generally the timeline is between 15 to 18 months to deliver them.
Okay. What is the expected margin profile for these orders and how do they compare with your existing solar EPC projects, sir?
So on the margin front, we have kept margins stable. Our existing projects are also between 12 and 15% EBITDA. And these projects also will deliver EBITDA of 12 to 15%. So we will have a similar margin profile on our previous projects that we have been doing and on the two large wins that we have had recently.
Right. Mr. Jaggi, how are you positioned to secure more sort of large-scale contracts? What I want to understand is, are there any upcoming tenders in the pipeline that you're bidding for that we could anticipate and expect announcements on this quarter?
So we continuously bid. We have a large bidding pipeline. In fact, the whole renewable energy sector is doing extremely well. And in this, there are a lot of tenders which are coming out. Not just tenders, there is a lot of action on the private side also, where a lot of private IPPs are setting up capacities and they need good large EPC contractors like us to execute for them. So I think we have a very strong pipeline which we are bidding for, and I am very hopeful that you will hear some more good news in this quarter.
What is the outlook for the end of the quarter, Mr. Jaggi? And what are you looking at ending the year with in terms of the order book size?
So currently, I think our order book, including energy storage, is about close to 9,000 plus crores. I think we will be able to add a couple of thousand crores more to our order book before the quarter ends.
Your unexecuted order book currently stands at 3,400 crores with 200 contracts under award. You want to tell me the timeline for execution of this and when will this be revenue accretive? Will we see it in this quarter? Will it be FY26? Just help us understand that.
Sure. So I don't, from the current order with very small quantity of revenue will be booked in the two orders that we have won in the last 1 week. Very small quantity of revenue will be booked in. Majority of the revenue from these two orders will be booked in Q2 and Q3 of the coming year. So from these orders, we do not expect any large revenue increment to come in Q4, the quarter in which we are. But our existing order book is very healthy and we would do a good show when it comes to our quarterly results. I think on a whole, Gensol has been growing 60, 70, 80% year on year, and we will continue to deliver those kind of numbers.
Phenomenal. Your net profit has grown 52% to 50 crores. But I don't know whether I missed it, but possible to quantify the expected revenue contribution from the unexecuted order book for this quarter and FY26 as well, sir?
So I think if I remember clearly, last year, Q4, we did 400 plus crores revenue. And like I mentioned, Gensol will continue to grow between 50, 60, 70%. And this quarter also, we will do 50, 60, 70% growth over the last year.
What is the split between revenue visibility between renewables, battery energy storage and solar power generation?
So battery energy storage has close to zero contribution for this year. The contribution from energy storage will start from the coming financial year. And on the renewable side, I think today it is primarily, like I mentioned, the 75-80% of our revenue is coming in from the solar business, and about 20-25% of our revenue comes from the EV leasing and EV leasing business. So these are the two business segments that we operate. Energy storage, you would see perhaps the revenue coming in from next year, from FY26.
You know, Anmol, it's been phenomenal for you and the company, right? Recently established, and your run rate in the first half of FY25, your revenues grew 49%. Now, is this a one-off? Is this sustainable? Do you feel like this run rate could continue for Gensol over the next 2 to 3 years?
So we have been delivering not just in H1 of FY25, but if you look at FY24, we delivered very stellar numbers. FY23, we delivered stellar numbers, of course, coming from a smaller base. But as our base continues to grow and the order book is extremely strong, and we have some fantastic wins, and that sector has some fantastic tailwinds, I think this does not look to me like a one-off, but it looks like a very structural story where renewable energy is becoming mainstream, and companies like us and others who are in this sector stand to benefit from it.
So margins have significantly improved. Now we are staring at 25.8, I understand, from 16.1 a year ago. What is this? What is this margin expansion about? Is it because you're managing to win orders at a better margin profile? Or is this more optimization internally that's leading to this? Or is it simply economies of scale? And of course, looking into the next couple of years, can we expect margins to expand further, maybe even inching up all the way to 30%?
All three of the factors that you mentioned, one, of course, is economies of scale. Doing a 1,000 crore project, doing a 1,000 crore revenue versus doing a multi-thousand crore revenue, of course, gets you more economies of scale without any doubts. Two, on the client side also, there is a good pricing power that EPC contractors now have. And if you look at quality EPC contractors in the renewable energy space, there are very few, and we are one of them. So you would see that we are doing there is pricing power that contractors have. And three, I think our procurement team is doing a brilliant job in getting the best quality materials at the best quality prices. So we are seeing all three contributing: internal, external, as well as economies of scale. And on the margin side, I think I don't expect us to increase further margins over here. We'll be very happy to maintain our margins at these levels.
And also, of course, the going is good and it looks healthy and the outlook looks positive. But I must ask you, right? I mean, you're also playing catch up in some ways because you're growing so significantly. And more often than not, the back end takes some time to play catch up. Are you at this stage anticipating any overruns or delays, cost overruns, delayed payments, delayed deliveries, anything that we should be a little more mindful of as we look ahead? Or anything that
So,
you're preparing for internally?
No, absolutely. I think while we are growing at a very significant pace, it is important to build up the right team, and we have had some very significant team additions. Shilpa joined us as the CEO for the EPC business. We have had a great CFO joining in. So I think the combination of our great CEO and great CFO along with the execution team is taking us to near heights. While we grow larger, we have to, of course, be having decent risk management in place. And as a team, we are doing enough risk management, whether it is on customer size, whether it's on customer payments. And you look at this, that if you look at the first 6 months of the year, actually our operating cash flow is greater than our profit. So we have been very good in collecting cash from customers.
Anmol, I know you alluded to this at the start of our conversation, but while I wrap this conversation up, any sort of closures, any sort of orders that are close to closure this quarter that we should be keeping an eye out for? It's
No, I
always
think
exciting to know.
we are bidding well. We are in a very good space, and Gensol will surely win some few more orders in this quarter and the coming quarters. Specifics I would want to avoid, but surely these are not the only two orders that we have won. There are many more which are coming in.
We are excited for you. Congratulations, good luck, and hopefully 2025 brings with it a lot more success for the company.